Certainly there's optimism in the air, Art, around a budget deal, a trade deal. How much of that is fueling this rally after a big surge yesterday?
Well, I think those are the two things that have been moving the market for days at a time. And this morning when the South China Post indicated that President Xi might join the Secretary of the Treasury, the market became very encouraged. The gossip around is that this is both parties want a deal badly, and if they can put something together, not only might the president delay the tariffs, but the rumors are that he's going to call Xi to Mar-a-Lago, and they are going to have a big, overhyped press presentation. But this will be the beginning of the 2020 election.
Why? He can use this politically?
If he's got a deal, yeah, I think so.
So the market likes all of this, Art. Question is, how much of a catalyst is it at this point with the optimism and the hope getting baked in?
I think you probably put close to 50% into the market already. If there was some further certainty, then I think you'd still have some more to go. This morning was important. We took the S&P up above the 2750 area, the 2745, 2750, right around the 200-day moving average. You broke above it last night, but only by a point. This was far more conclusive. So the bulls have the ball and the momentum, and we'll see where they can go. This is an expiration week, so tomorrow could be highly volatile. The Thursdays before expiration often are, so we'll keep an eye on that.
Nick Colas had a good note last night about how U.S.-China trade is basically, makes the biggest one-decision market we've seen maybe since the beginning of Fed bond buying, he argues, because correlations are also close together, and they're all pinned off of what happens, what we get out of this Mar-a-Lago or Beijing, wherever it would happen.
Yeah, no, I think that's clearly correct. I think you want to be a little careful about how that goes. As much as we would all like to see foreign trade pick up again, often when you begin to get what looks like a loosening up or resurgence of foreign trade, perversely, people start to buy foreign markets rather than U.S. multinationals because that initial burst of trading provides some competition for where we are.
So if you sort of zoom out and look at this tremendous rally we've had since the beginning of the year, where all the major averages are out of correction territory, meaning they're all off less than 10% from recent highs. What was that in December, looking back? Was that just an overreaction to some worries about recession, or was it the market telling the Fed this is how you're going to do it? Or is there a reason for investors to still be alarmed about that sort of action?
Well, I think it was a combination of a variety of things. There was some rather intense tax selling. There was shifting between institutional investors and others. And there was the growing feeling that we might be headed toward an earnings recession, that earnings would go rather sharply.
That's still out there, isn't it?
It's still out there, but it was far more intense in December. And when you came back and new money for the new year started going in, and we turned the tide, now it's, people, there's a tendency to just follow the tide, whichever the way it's going. And, you can see that the number of optimists in the polls coming out. Now that the market's turned up, they believe in the market again. So it tends to feed on itself a little bit.
You got home construction today, the ETF above the 200-day. All these home builders, furniture, right, semis, industrials. Do you see that leadership flipping for any reason?
I think some of it has to do with the tempering of the outlook on interest rates and the fact that mortgages have, for the time being, stopped going up and moving back. Even the inflation data that we had today was non-inflationary. So, you know me, I've been a long-term bear on rates, and I think that they're going to keep a cap on them. You're seeing Europe is beginning to slip into recession, at least in several of the members. And so they're going to keep pressure on interest rates down there. So I don't see any spike in rates coming. That's got to help the home building and domestic industry.